Okay, guys, next up here, by your request, we're going to look at the Aussie to the US dollar. Now, we've looked at this a couple of times before, and so I've got a 3-day out here. Uh, we're going back to the '02 lows here. That's all I've got here on all I end up. Now, let me start by saying this. See, we, for the most part, with what we're teaching here with an Elliott Wave focus and our how we combine geometry with fib retracements, extensions, alternate price projections, all of this, right? So this is very, very applicable to these longer term approaches to the market here, where, again, I'm out here on a 3-day, where these trends can go on for many, 3, 4, 5, 6, 7, 8 years. So, if you're trading FX like that, the mindset really should be more like you're trading an equity, right? So you're not looking for short-term action here. So when you're out at this distance here, the day-to-day chop that is so pervasive in FX, and the last report that makes the market move, you're removed from that out here at these longer degrees. But it requires a completely different mindset. Most traders are looking for things but maybe a 2 to 3 week trade would be long term. For out here on this degree, 2 to 3 weeks might be just the time you wait for something to set up. I mean, these are really long trends. I mean, when was our pivot up here? 2011. I mean, 8 years later, we're still going down. So it's a very different approach to trading. You see, I would tell you that if you're trading in FX, and if you're not going to be out here on the daily, weekly, the longer term stuff where you're waiting, you wait a long time for something to set up just right, and then you wait a long time for it to be realized. These are big monster swings, but the kind of thing that you might hold for 2-3 years. Right, much like an equity, right? So you have to think of it that way. So I guess unless you're day trading stocks, most people are looking at an equity investment and saying, "Gosh, if I could double my money in 2-3 years, what a great investment that would be." Well, when you're trading FX out here at this time frame, that's kind of how you have to think of this, right? If I could get this retracement here to hit that target, well, that's 17. We'd be hitting towards the beginning. There's a 3-year move right there. See, so either you want to approach it this way, where the trades are going to be few and far between, but the potential returns here are just enormous. Or you got to go down and trade the 1 hour and the 15-minute, and then take advantage of the. We haven't done a lot of trading on this, but we're going to in the new year, which is the 3-day cycle the market makers use to push the market, take advantage of the public and push the FX markets around. But that requires really just a real focus on FX almost exclusively, because you can't bounce back and forth, because really you'd have maybe 12 to 15 pairs you're watching. And this phenomenon is happening every week, week in, week out, and it requires a specialization in that, where you're really on top of things, and you are certainly vulnerable to the next report that can move the market. But there are very consistent patterns that market makers use to take advantage of the public, right? It's which is well known. It's no secret I'm revealing here, right? Many FX educators teach it. It's just with our approach is a little bit different here. Now, we are going to get into some of that. And I'm going to show you an example here when we get over here, right? You can trade the short-term stuff here. But it's just different mindset, right? So you kind of have to, when you're putting together a trading plan, if FX is a part of it, that's a very hard fork in the road decision you got to make. Am I trading these longer term swings out here on the daily charts, or am I on the 15-minute and the 1 hour, where there's going to be much more activity, but you really have to focus on it, and you have to know. The market makers have it's not inconsistent with an Elliott count, but they tend to move, and they have 3-day cycles here. So there'll be these accumulation zones here where you'll find they'll move in three levels here, right, as it came down. And now we will do some trading on this, and it fits nicely into a potential Elliott count. But this is just, of course, perfectly drawn. But this does seem to be the tendencies. It tends to be There's the first push, the second, the third, and then the top before the whole thing. Right here's where they're trying to get the public in, and often you'll see this kind of stuff, right, where you'll get an M or a W here, and then the whole thing starts all over again. Next 3 days they take it down. Now we're going to do some detailed trading on that, right, coming up in the new year, because we've got so many people from crypto are now moving over to FX, because crypto is just, I mean, what are we, 2 years into a bear market, right? I know, right? You know, I'm waiting for it to go as well. But there's so much opportunity over here in FX. But again, you got to understand the nature of the game that's being played here, which is why most of the analysis that we do here is out on the longer term time frame, where I would tell you 4 hours and above is where you want to apply Elliott Wave and some of the things that we teach. All right, so now I'm 5 minutes into the video. We haven't talked about the market here yet, but I just want that's a very distinct decision you got to make if you're going to trade FX. All right, so once we get into some of the intraday stuff, the 15 and the 60 that we'll do likely after the turn of the year, then we'll get into much more of that detail. And you can make a decision as to whether that's something you want to focus on. All right, so with that said, here from where we're sitting here on this 3 day, does look like it's an ABC up here. We get to see the clear 5. Now this gets a little bit of a challenge for an Elliottician here. I do think you've got to go 1 2 1 2. This is a little dicey up here, right? But then the impulse here that comes down here, 1 2 3 4 5 case, you know, we got to call it an impulse, right? We can't just ignore it. So then the 4 here doesn't overlap the 1. So if this is the 3 4, it looks like we get the extension in the 5th to give us the 3rd ABC here. Nice, and it's technical. Oh, I was just looking at here. So if that's 2 to the 4, right? You waited a long time for that 4, right? And we didn't, you know, where are we looking for the 4, right? Between the 23 and the 38, right? You kind of look left here, right? Big low volume here as we come up here. Well, you might have been anticipating here, but as we roll over, just something simple here, just a little trend line break would have had you short here. You get below the Vegas wave. Now note here, do you see that? Let's go to the daily. Do you see what they do here? This is very, very, very common. You hear me talk about this a lot. If you're using trend lines, this is something to note. We break, but then we come back up and test from below. That's the end. That's really you see it here? So they come down, they come back, they test. Now look at the Vegas wave right there. That's a must take. If you can wait, you got to be patient for those. But once you get that, here's something crazy. I can't remember what that was. That was at the end of last year, right? So we're still look where we are here. That's 2019. That's December of 18. Before, and we're still, right? So if you were short here, you're still short. Look at the Vegas wave, right? So remember, Vegas wave came from FX trading. Look at this, right? Just, oh my God. Doesn't get any better, right? In terms of the resistance all the way down. So now okay, where's the 5, right? Do we have a clear count here? Well, you know, what do you do with that? All right, so that I call this is an anomaly. This is a news event. It's quickly rejected. So I'd be more inclined to be looking here something along 1 2 3 4, heading for a 5. I mean, you're kind of stuck with it here. I mean, I suppose you could. Yeah, I don't think I would. Here, I'd do it this way. All right, so something like that. So here, look at the perfect retrace here right to the 233. We don't overlap, ticks it. I think that is more likely here, and we're living with that anomaly here. So this would be, if you're going to include it, 1 2. We're in the 3. It looks like 4 5. There's potentially now there's more to come. Now, but note here we are getting down into this prior zone down here where we're getting a little. So you're trying to use the fib relationships per what we know are consistently seen in Elliott counts like this, where it's so clear what we're in. We're 1 2 3 4 is hard to argue with that. Now could we be basing into something that's done here? Yeah, well, of course we could. All right, so let's zoom. Oh shit! What did I just do there? Here, let's get you back here. So if this is 1 2 3 4, well, we're not to the 100 yet. Again, just kind of using traditional relationships here. Length of the 1 projected from the proposed 4. Well, I've got the 618. That's kind of why I had these down here. I would like to see that If we could get to the 100, then you'd have a little something more to work with. Here, you're kind of a little bit of no man's land. We're going to look at some stuff, smaller time frame, but you do have the potential target down here. So if it's not going to be the 100 that's the pivot, if we're going to come down here, the 127 would be the next place you'd be looking for that, and that's right on top of the algo target here from this pivot here using the 2 to the 4. Now that's deep, right? Getting it down here, we'd be, well, we'd not seen those low. We'd be back here to lows we had not seen since 08, 09. Right? These currency trends are long-term trends, right? That's why big players, right, that aren't caught up into, where's the trade today, to get themselves positioned here. They let the machines do it, right? They're not tempted to take profit. They let the machines do it. Okay, so with all that said, here this seems like a reasonable target. Now, just to give you the flip side here, so I think here we just kind of put, I might get all that in there, something like that coming, like that coming down here for this 5 looks decent here. So I'd be hesitant to be a buyer off of anything when you're fighting. Right? Okay, so we got an 8-9 year trend, right? You want to try and pick the turn. Really? I mean, remember this. This was taught to me years ago, right? So anytime I'm tempted to buy and try and pick a turn, buyers at lows create new lows. Sellers at high create new highs. It tends to be very consistent when you're trying to pick that turn, right? So what are you going to do? You're going to put your stop right below the pivot. Right? So if we start to sell off, if it starts to come back down, those stops are the fuel that take it down, right? Buyers at lows create new lows. So I'd be very careful there about trying to pick that turn. It would look great on your Twitter feed, but I wouldn't try. Why? What's the point? Why? Right? If this is going to start to turn, there will be plenty. Look at the size of these moves. There will be plenty of time to get into it. All right. All of that said, let's just go down now to some smaller time frame. Okay, so I'm going to just get rid of all this, right, which is where I think is the safer way to trade if you're not specializing in FX trading. Okay, let's go all the way down to the 60. All right, 60, right, we got all sorts of action going on here. So, shit, can I even, I got to go back to the 3 just to kind of get some perspective. So here's that crazy wick, which I'm more inclined to just kind of say, where did it close? Right, where was the closing bar? It looks right about there. This is just, it's just quickly taken back. But right, we can't ignore it. It's something to be noticed there. But in terms of how would you deal with that in your count, right? You really can't. It kind of screws you on the count. Oftentimes you can go to a line chart here and you might avoid some of that. So here's the close, right? So that often can be a better way to approach this. So when I have those kind of things, that's what I'll do, thinking 1, 2, okay, so I can maybe, right, we don't want to discount it, right? So something happened there. 1, 2, maybe. That's not looking like a great looking 3 here. Looks like we'd have to trade this as a diagonal. So let's get that. Come here. Get you up a degree. Come on. Okay, so 1, 2, 3, 4, right? So deep. So this would have to be ABC, ABC. Are we ABC? Well, maybe, right? Nothing says we couldn't be. Right, this kind of interesting. 50, we get the algo target here using the closing. That was what I'm doing here. Right to a 50. Look at this, just Jesus Christ. Look at that. Right, it's just straight to it. Right, it doesn't even stop. Right, just a straight. I promise you guys, that's all that's happening there. Software sold that. They buy it down here. Okay, so what do we got here? Well, let's look at this now. So if you were down here, so let's go back to, let's get our candles back on here. All right, so if you're looking at that, recognizing you have this anomaly over here, and you're thinking, oh, maybe I'm done down here. Well, I'd be checking and say, all right, how do we look here? Do we have a little divergence? Not really, although we do get a technical pivot here, which is where I've a long-winded way of getting there. All right, so we've got Right. So as I've told you guys many times, do you see all the swings here? Right. We'll just do a few of them. Right. Here's golden zone to target. Right. It's just over and over and over and over again, guys. Right. I mean, I bet if I spent 15 minutes here, I bet I could come up with 100. There's swing, golden zone, second target. Right. Then we go here. Right. It's just over and over and over again. Right, so front run, maybe. It looks, I mean, obviously, right? So this was a front run. It could have been this structure here. I played, so here, prior resistance becomes the support. Is that the front run? Well, look here, where we go. All right. Now, back. Now, this one, yeah, you will see a little slop around the edges here with FX here. So here we get through, but then we get the straight rip. So you might be thinking, okay, well, let's, right, here's what you deal with down here at this level. All right, so it comes back here. Now what do we do here? Golden zone. It's just, particularly guys in FX, it's just obscene how it's over and over and over and over and over again. But you got to really stay on top of it here. So look, we get the break here, and you're thinking, oh, okay, right. So this is when it's where FX gets a little tricky. So what is likely happening here, and this is kind of what I was talking about before. This is a stop run. So you will see these little this is very, very common in FX. You'll see this little spike down and then it immediately rips. And what time is that? That's likely your Asia session. So this would likely be Asia. That's London. Looking at the time here. Yeah, this would be Asia, right? And then we get into now we're into London. Again, we'll spend more time on this, but this is a very common thing that you'll see where you'll get this kind of little consolidation here. Then this is for breakout traders. They're trying to get them to go short, and then they immediately get bent over. But remember, market makers, they have to accumulate the shorts before they can take it up. I don't want to get ahead of myself. We're going to get into that in the very near term, probably after the holidays. We'll do a whole new series on that. Okay, so now we look here. Oh, pardon me. Let's get this back, right? So we go golden zone. So you're thinking, oh, golden zone is good here. We broke down here. Now we're going down here for this. And of course, right, we get the tweet today, right? So we get something else happening. So here we take a look here. Say, okay, well this one didn't break. This one broke. This one went a couple of ticks in front. What about right here? All right, it's just the same thing over and over and over again. Here's 50 to the tick, straight to target before we get a little pause. All right, now it's got more legs. So what would you have here? Let's get this one off. Corner pocket. All right, these are like gold in FX. All right, so note here. So here we get the reaction at the first target. We're still going because we haven't got the median line yet. Right, now remember, it's 80% probability right here as long as that pivot doesn't hold, and we're not there. We're not there yet. So you might be back here trying to put a count together on this, but this is the point where I started. So here's actually a fairly good example here as well, where you see the accumulation here. This is kind of what we're going to talk about here, where we get well, you'd really do it this way. All right, so we get the same idea where market makers. So it's three. No, it's here. You can. I didn't deliberately mean to do this, but you can't help but see it. All right, so you get these patterns over and over again. All right, and then you come down. Then here's the turn. Right, often there'll be a double bottom here, or there'll be a spike down here where they'll run the shorts and then rip it here because they're trying to get the breakout trader so they can accumulate the shorts here and then rip it. Right, so it's 3 down, 3 up. Often it'll be three down, 3 up. And you'll see this, and it'll go over. It's typically a 3-day swing. 3 days down, 3 days up, three, and you get it again, right? So it's again, right? Same thing is happening here. So here's the first little zone, and you get a little congestion zone here, and then this typical here. They're trying to get to draw you in here. Up they go, right now here, then back down. So is this going to be the third one of the potential turn? Could be. Now we start it over again. Again, we'll get into all of that. So stand by for that, members. Okay, so as we come out of this, right? Is this 1-2? Well. Right, we just drew it up, right? So, I mean, certainly it qualifies as a potential 2, right? I mean, sure, we broke the golden zone, but look here now. So it looks like it wants to go. I'd be drawing some geometry around both of these. So here from the low, right, to this. All right, so you've got so here, this would be definitely an area of interest. Right up here where we get the intersection. So if this is going to go, let's try and put an Elliott count on it. So if this is going to go 1, 2, well, there's our 3, 4, 5. All right, and that would be consistent with this 3-day move, 3 days up. So if this is the turn, here's the first pivot, right? Consolidation. Here we get the craziness today. Up we go, right? So it's not likely to go just, well, I shouldn't say that. It certainly could, right? So likely something or a little retrace, and then we're up, and then we can continue to go here. So the fact that we've missed here, remember now, if we don't make the median line, it sets up a move equal to or greater than the swing that failed to get there, right? Equal to or greater than. So if we start to come down, that's a high probability is that we're going to come down and at very least challenge this low. So right now with that, I'm on a 3-hour. Let's go to the 1 hour. If that's 1, 2, so you can see it, right? So if that's 1, 2, 3, 4, maybe there's one more push up for the 5, but they're going to want to get that median line, right? We want to get that. So I'd be watching that one here. This little 3 here is a bit, you'd prefer to see that better hurry up and get a little kick going up here, because otherwise, best case here we'd have an expanded B, right? If that's going to stay as a 3. A little iffy here. You'd rather see that come up here and complete the diagonal and get the median line. So bottom line, I don't think there's I wouldn't be doing anything until we get more confirmation of where we are in this. All right, so if this is just going to be a little baby 1, 2, oh, shit. And this is the 1, 2 at the degree higher. We'll put that in, we'll go yellow here. If it's 1, 2, and we're in the, is it the third? It wouldn't be the third. It'd be the 1 of the third, right? So here's our target for the third. So if we think about putting that all together, okay, length of the 1 projected from the 2. Well, here's the 1618. If we're going to get that high, right? Here's the 1618 window. But I'm kind of using this intersection here as the geometry here from the two sets of median lines that are combined. Get you right back over here. So 1, 2. That's not going to be 3. Right, look, we just made 100%. Oh, there it is. Jesus. I'm about to walk off here and not bring that to your attention. Look here, 1, 2, right? It's 100% to the tick. Again, guys, no random pivots. There are no random pivots. So 1 and 2, I can see that, but if that's going to be the turn here, could that be the 3? Well, it could, right? We've got 100%, right? You'd like to see it a little bit longer here, but I'd be a little suspect because it's just a little ABC here. So I'd be suspect of that as planning my third here because of that little ABC. Yeah, I can go down to the 15-minute, but I'd be a little suspect of planning the 3 right here, right? I think that's more likely there. So if this is a pivot, I think more likely here we're just putting in the 1, and we'd be looking for the 2. So how do you know? Well, let's get this off of here. The only way you're going to know is, do we stay consistent with what we'd anticipate in terms of depth of retracement? If it's the 4. We'd be looking for something more shallow here. If this is going to trade as the 1, then we're looking for the entry down here between the 50 and the 618, right? And the 4 would be a different story. That would imply that it's complete here, and this is the 2. So we'd be thinking 1, 2, 3, 4, 5. So implying higher prices. All right. So God damn, I didn't mean to go that long. let this come down, right? So you're going to want to pay attention to the structure here as well. So always wick off your ones. So something like this, right, would be a tell, because if this is going to go 1, 2, and that's all we're going to get is 100% the length of the one. Well, you sure wouldn't. You'd be paying close attention to that one, because this does not look like an ABC. It looks, I mean, it already is trouble to have it completing as an impulse because of the ABC and what would be the fifth. So I'm a little suspect of that. And I'm going to like everything better if we retrace here. I want to get that median line. All right, then I have a better feel for how the market's moving. All right, guys, a lot of stuff there. Just maybe more education, as well as, you know, maybe setting up the next trade here. But I think you got to watch and see how this plays. So my point being, when you're down here at the 1 hour and working with the 15-minute and the market maker pattern, then you're dealing with this all day, every day, right? Well, at the very least, you're checking the majors, right? So you really have to put the time into doing this. And that's why most of the stuff I would tell you is 4 hours and above, unless you're going to specialize in FX. Right? Okay, guys, that'll be it for now. That may be it for today. Okay, guys, talk to you.